You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Bitcoin, Ether, Ripple, Litecoin, and more. Cryptocurrencies and other digital assets are taking the financial world by storm. This exploding market provides everything a savvy trader needs: volatility, volume, and liquidity, provided you know how to find it. That's where we come in. Welcome to the Crypto Rundown. Each week, we'll break down the latest trading activity, trends, and developments on everything from coins to tokens, futures, and even OTC options. If it's moving the crypto markets, then you'll find it on the Crypto Rundown. The Crypto Rundown is brought to you by Acuna Capital. Known as the new wave in tech and trading, Acuna is a leading derivatives market maker in traditional asset classes. As one of the first trading firms to make markets on Bitcoin futures, Acuna is also proud to be an innovator in the cryptocurrency space. Through a collaborative flow of knowledge between developers, quants, and traders, Acuna designs and implements their own low-latency technologies, trading strategies, and mathematical models. To learn more about our rapidly growing firm, please visit acunacapital.com. Now it's time to dive into the exploding world of cryptocurrencies and digital assets. It's time for the Crypto Rundown.
All right, everybody, that music means it is time once again for the Crypto Rundown, the program here on the old Options Insider Radio Network, where we break down everything on the crypto space. So we're talking Bitcoin, also ETH and Litecoin, and all the other fun stuff going on the altcoin universe, as well as the listed derivatives and some of the not listed stuff going on as well. All sorts of fun stuff. Hope you guys are enjoying it. Clearly, we've been doing it a few months now. Clearly, you guys are liking what you're hearing. My name is Mark Longo, and we're gonna bring you into all sorts of fun here. We like to kick the show off whenever possible with a fun interview, so we can pick the brains of different people from throughout the world of crypto derivatives for the benefit of you, the listener. So let's get right to it with the old crypto hot seat.
Forget about cold storage. It's time to turn up the heat on thought leaders from the world of cryptocurrencies and digital assets. It's time to take their place on the Crypto Hot Seat.
All right, everybody, welcome to the Crypto Hot Seat. This is indeed the portion of the show. Like I said, we welcome on guests from throughout the world of crypto trading and proceed to pick their brains for the benefit of you, the listener. Today's guest is a newcomer to the program and indeed to the network. He is Emmanuel Go, the co-founder of SKU, which is a new startup crypto options exchange. Emmanuel, welcome to the Crypto Rundown program.
Hi, Mark. Thanks for having me.
And Emmanuel, as we are wont to do with all of our first-timers here on the old program, why don't you go ahead and give our audience a little bit of an overview of your background in the financial and indeed the crypto space, and then what the heck is it that made you want to start a crypto options exchange?
Yeah, sure. I actually had a career in finance before, starting SKU a few months back. I was, trading single stock options at JP Morgan for nearly 7 years in London, looking at European single stocks and lots of, companies in general. And yeah, I felt, after a good run in the market, really interesting, really learning a lot of things, working on the trading floors in a very large American banks. I felt the market was quite mature, and after some time, it was was looking for maybe a bit more growth and something a bit more entrepreneurial, and at the same time, really like finance and economics and business in general. So when I was kind of a late mover to the crypto scene. I started to look at it in 2017, where the big run up happened, and it really caught my eye, and like everyone, really looking at the space, thinking, who is doing what are the infrastructures out there, what can you do, and starting to dig into more of like the specificities of each coins, and really, I felt really interested. I think, it's still hard for me to say, this is really big, so that means, all the coins should be really expensive. That's one side of it, but I think some of the technologies that are developed here, around distributed technologies are really interesting and will stay in some sort of way. And if you think this is big and you don't really know how it's gonna, in which way, in a way it will kind of change things, in the world, you want to be involved as early as possible. So that's what I did. And at the same time, looking at trading those, traders like volatility, and this is a very volatile asset class. And, I really, found out very quickly that, the derivatives market was kind of underdeveloped. And in particular, you didn't see much on the option side, which is something, a product that me and my co-founder, we know fairly well. And yeah, we felt, this is a cool opportunity to kind of get involved in the space and probably try to make some money as well from the business perspective.
Always helps in a new business if you can make a little money at it. That usually helps as well.
Yes, that's something where we feel you have to think really, kind of big picture. And sometimes in the startup scene, talking to lots of investors, you feel it's not as much as a priority as in some, more like short-term businesses like we see on trading floors, where you kind of live and die by P&L, and it's every day a different day. You have to kind of find a balance, I think, between those two. But on our side, we come from like financial markets, so it's something we have in our mind.
Yeah, you're right. When you come from the trading world, it's very black and white. You have a P&L every day, right? And that's kind of how you live and die. And in the startup world, particularly in the venture-backed startup world, it's a little bit more esoteric. It's a little bit more about the potential size of the market you're going after and potential revenues and all these things. So you're right, a little bit different metrics from that
yeah,
perspective.
I think the truth is, sometimes in my old job, I felt we are a bit too short-termist, and maybe in the venture side, sometimes it's, people are, people are being over patient maybe with results, but the truth with all those things, it's not black and white. It's somewhere in the middle. So yeah, we are excited to learn the new phase of like looking at running a business, and for sure, like what we've talking to venture funds, it's really interesting to learn from them.
And have those funds been receptive about the? I mean, obviously, just from my own anecdotal experience, seems like every day these days when I go to another conference or another event, or I meet someone at some sort of industry function, there's a fairly high probability that they're going to give me a card that says, "Hey, we are the new crypto derivatives exchange X." There's a lot of those popping up right now. It's a hot space. Is that something that you're encountering? Is there already a lot of people out there maybe kind of muddying the waters, or are the potential investors, are they excited by the prospect? What are you hearing out there anecdotally?
Yeah, there are many exchanges out there, and I think the story, well, as we see it, there's been a lot of work initially on custody, and it was really around, can you hold the coin safely? And for most of the times, it was not, really possible. And alongside this, you saw the development of physical exchanges, and now there are more than 200 of them, and it's kind of crowded. And last year, this was kind of really personified by the rise of Coinbase and Binance, I would say. Last year was really around, as the market was correcting the full year, the kind of derivatives market really kind of took off, really led by BitMEX, where you saw a lot of volumes on the famous perpetual swaps. And I think from there, what makes sense is looking at options. We know that futures and options work together, and this is kind of still understood as like a niche product within the cryptocurrency space, but coming from traditional markets, options markets are very, very large. Options on S&P 500 are trading around $500 billion a day, and the open interest is around $5 trillion a day. So those are not small markets, and more interestingly, when you do some research, options are really good to build, I would say, more granular hedging and investment solutions, which institutions and more sophisticated investors are quite like to have, available. So yeah, I think there is. The kind of exchange space in the physical space, I would say, is crowded. The flavor of the moment is really to go after some of those futures products because BitMEX done so well, and in a bear market, it's very useful to offer a product where people can at least neutralize exposure or go short. But from our perspective, the natural development from there is looking at more more sophisticated products, and our angle, I think, from our side, as of now, we've done a lot of work on data analytics, and I think our platform is the only one where you can see the vol curve, the term structure, the skew, open interest, trade monitor, all of the stuff that you would be looking at if you were trading options, in a large bank. And we think this was much needed because there were this kind of, I would say, almost misunderstanding that the derivatives market is not good for cryptos in general, where some of the research have been showing that it's actually a stabilization factor. So we felt strong about rolling out the platform so that to kind of dissipate the misunderstanding and make people more aware of those products and more like kind of embrace them than kind of fight them. So this is where we are. In terms of the exchange, I would agree that there are many of them and there is a lot of capital that's being deployed. Our view is that the crypto market is nascent and is in a way the exchange is kind of doing everything at the same time. It's almost like is the custodian, is the clearing house, is the exchange itself. So we expect is the distributor. So we expect some fragmentation down the line with people kind of specializing in different areas. So in the crypto sense of the world, we probably want to be an exchange, but in the traditional market sense of the world, we might be closer to maybe a broker dealer than an exchange, or closer to a distributor. But that's something that's still up for discussion. But just to highlight that I think there are decisions to be made, and our view is that we don't want to be an exchange on the crypto sense of the term.
It does seem like those boundaries, those definitions are very blurry in the crypto space. When you look at financial markets, traditional financial markets like here in the U.S. or overseas in London and Europe, there's a very clear demarcation between an exchange and a broker, right? They're not the same thing. And yet in the crypto space, a lot of the venues, let's look at the U.S., for example, the leading venues, the Coinbases, the Kraken, they call themselves exchanges, but their functionality-wise, they're very much like brokers. They're onboarding clients. They're doing the customer outreach. They're a lot of the front-end interaction with the client. It all pretty much goes through them. So they're effectively, in many ways, more like brokers than they are like exchanges, even though there is volume going up there as well. So it does seem like those lines are very blurry in the crypto space, which is interesting, maybe also a little bit problematic. One of the reasons why we've probably seen some regulatory issues. We'll get to all that fun stuff in a little bit. But you kind of have touched on for us a little bit of where you think skew falls in the landscape. Let's give listeners an overview of exactly what it is you guys offer over there at Skew. If I come to Skew right now, which options, which derivatives can I trade?
So I think as of now, what we offer is we are the only venue where you can find all the analytics related to cryptocurrency derivatives. So that's Bitcoin and Ether futures, Bitcoin and Ether options, and Deribit launched Ether options on their exchange last week. We look at the decentralized finance space and all of the metrics. So we have probably around 75 charts, and I'm quite confident that this is kind of the only place where you can find them, and that's going to give a lot more transparency to the crypto derivative space around metrics and what numbers and what makes sense and doesn't. So this is where we are, and this is allowing us to kind of build a community around our name and build gradually our name, and we provide market color on Twitter. And I think this is very much like institutional way of doing, the way we look at things. I think there is, again, on the data analytics side, there is, it's a little bit crowded on the technical analysis side, but on the kind of more institutional type of research and looking at flows, like we come from the flow options desk, so we really like to understand who is buying, who is selling, what's the total positions are standing in the market. So we've done a lot of work on that, and I think on that stage we are the leader, I would say, in crypto derivatives analytics. In terms of the products for customers, it's not there yet. We were, in fundraising mode, and we're gonna have to kind of build our product. And as I said, it's still a little bit early days for us. But where we want to go is really on the angle of hedging solutions, risk management solutions, and talk to, I would say, more sophisticated investors, which would mean we don't see ourselves as a retail business.
So I know you're not really up and running fully yet. It sounds like the planned product mix is going to be, your traditional Bitcoin options and futures, and a little bit of the Ether futures and options too. Is that the planned startup mix?
Yes. I think we want to, this is to come back on the point of the exchanges where, in traditional finance, where when a retail customer is buying Apple stock, it doesn't go and place its bids on the New York Stock Exchange order book. It's gonna go through a distributor, a broker, be it Robinhood or TD Ameritrade or someone. Or if you have a big corporate like anyone, Siemens, who is buying a lot of, say, a particular commodity, is not gonna go work the order himself on the pit. He's gonna go through an investment bank. So this is where we would like, I think, guide people a little bit, and because I think some of the customers that are really in need of hedging solutions, for instance, the miners. They still have, I think it's not really their jobs to be an expert in derivatives, so you have to guide them a little bit. So we'll definitely have this kind of almost advisory angle to our business, and probably less of an exchange. But there is some concept of exposing liquidity to a set of customers that we feel are really in need of options liquidity, and kind of guiding them in terms of what makes sense and doesn't make sense for them to do.
So it sounds like where you see SKU fitting into the landscape is not so much on the product side, but on the back end side, all the things you mentioned before that are not really as readily available on other platforms, at least not in the same format. The SKU, the back end analytics, that's really where you see SKU kind of standing apart and maybe appealing to a more professional, institutional type investor. Is that really the plan?
Yeah, it's a package. The analytics side for us is very powerful because it's positioning the brand as kind of trustworthy, and it kind of shows as well that there is a good business opportunity, given the fact that naturally, despite the bear market, we get an increasingly involved audience through Twitter and through our metrics on our website, and that's really good to kind of build any sort of business subsequently. I think the idea is not to monetize. I'm not too sure. Bloomberg is a fantastic company, but it's very, very hard to build Bloomberg, and I think it's very, very hard to make money from data analytics. In crypto so far, what's been very profitable is to be either a liquidity provider or an exchange. So this is more, in that sort of area that we would go for the kind of monetization angle. But I think, from that stage, we'll probably do some announcements. It's a little bit early for us, but towards the second half of the year, you should hear from us.
So that's the roadmap. Then second half, Q3, Q4 of 2019 is when we should plan to see SKU up and running and trading some options and some futures.
Yeah, so I think there is a tradition in startup to kind of have very, very tight timelines, and then you always have delays. So we want to avoid that. So I'm not gonna go down the line of giving some too strict timelines, but we would like to have something fairly soon before the end of the year. Yes.
And obviously, like I said, it is still early days for you guys, and obviously you're HQ'd over there in London, so you probably focus on the European market. But we do have a very sizable U.S. audience for this program. So I'm curious, what are you looking at in terms of global markets that you're aiming at? Obviously, the regulatory regime's different everywhere around the globe. Are you mostly focusing on Europe? Are you going to try to target the U.S. as well? What can we expect from you guys?
Yeah, so I think we feel very strong about London. That's not, I would say, a crowded view in cryptos where people are kind of saying that most of the flow is in Asia and in the US, and are a bit kind of dismissive of the kind of Europe region as a hub for trading and for trading cryptos and demand for cryptos. What we think is, London has a very, very big tradition for finance. There is a lot of talent here. There is a lot of money. There are a lot of potential customers. And there is a tier one, a top, tier one regulator that's getting increasingly engaged with cryptocurrencies and distributed technology. So they are starting to kind of communicate a little bit more. And at the start, they were very cautious, and they are still very cautious. The FCA is still on the side of caution, but in terms of they publish reports regularly, and the last one. They were kind of, we felt were a bit more engaging in terms of they were now showing that, if you're thinking about doing this type of business, you should probably consider this type of license. And then you had recently a very big a very large M&A deal for the crypto space with crypto facilities that was sold to Kraken for I think north of $100 million, and that's something that had to be approved by the FCA. And also recently you had B2C2, which is the largest physical cryptos market maker out there, based in London, that received also a license from the FCA to do CFD. So I think the regulator in London has got concerns around product that wouldn't be such a great fit for retail customers, so they are very wary around trading high leverage futures or perpetual swap for retail. And we kind of agree. We really agree with that approach. We don't think it's kind of a recipe for disaster for this type of customers. They're also a bit worried around KYC and AML, but that's something that's not kind of just for the derivatives market, but for cryptos as a whole. And they are also worried around market integrity. But I think in terms of the way the situation is evolving, I think they are getting more engaged, and I wouldn't be surprised if people turn, more and more to the UK for setting up a proper crypto business, I would say, globally. And, from the perspective of regulation, there is this concept that maybe, it's okay because I've got a license from Malta or Gibraltar or somewhere, but, the license is only as good as what you can get, as the kind of jurisdiction that's issuing it. And I think, from a customer perspective, dealing with a business that's got a license from the FCA or a license from, I would say, a tier 2 or tier 3 jurisdictions like Malta, it makes all the difference. So yeah, we are very bullish on London. I think one of the great points as well is around talent, where the city of London and London is the hub for FX, and there is a lot of talent to build market infrastructure, and I would think is unparalleled with probably New York and Chicago together, which have a lot of talent as well. So yeah, that's really interesting. And what we found out as well in running all our data is there is something that's going to be hard to disrupt in cryptos, is the fact that it's the time zone. So when we look at the time of the day where you get the most volumes, it's basically European hours, and that's the case in traditional markets. And that's the case for BitMEX, it's the case for Deribit, it's the case for most crypto venues that we looked at least in the derivative space. And that's really interesting because in Europe, in the morning, you get Europe plus the afternoon of Asia, and the afternoon you get the end of the day for Europe plus US Open and US trading. So and that's something that's going to be hard to be changed, and that makes it more difficult to set up like a trading hub in even San Francisco or Australia, I would say. So this is something where we are positively surprised and makes us even more comfortable that London has more competitive advantages that people think.
Yeah, you're right. That is an interesting point, because we've had a lot of different people on this program and indeed on our network over this program for the last 3 months, but on our network for well over a year now. And clearly we've seen a huge uptick of interest in and around Chicago for the crypto trading side and the derivatives trading side. That makes sense. There's a strong community and history of that type of product innovation here. We've seen it also obviously in New York and other areas where they're looking at some of the blockchain as well as some of the large top level crypto stuff. Clearly there's a strong presence in Australia. Half of our guests, it seems like, from this program have been in and around the Australia region, so a hot interest there. Obviously, Asia, you're right as well, another strong hotbed of interest. But we haven't seen a ton of interest coming from the UK here, and particularly London. So it sounds like you think that's turning around, or maybe you guys are single-handedly turning it around there, Emmanuel. What do you think?
Yeah, no, I think recently the two news on B2C2 getting a license for doing CFDs for kind of institutional investors, and the sale of crypto facilities to Kraken are very, very bullish signs, and yeah, this is the city of London, and there is all of the talent and the customers, and there is a lot of money, and the fact that the regulator is also starting to be gradually more helpful, I think makes it quite compelling on top of the time zone. So maybe we are early, but I think it's good to be early if that can give us an early move advantage. So yeah, we feel strong about it in terms of. At least to have an headquarter here and build the financial infrastructure and get the funding sorted and all of this stuff, we feel really strong. Later on, it's true that on the distribution side, if you have a big sales force, probably you have to kind of be located where your customers are, and I think that's really interesting. But this is actually the same kind of, I would say. We observe the same in the traditional economy, I would say, but it seems like there is a lot of there are funds in stores that are located in the US. This is where you would see a lot of demand from potentially crypto hedge funds looking to trade more sophisticated strategies, and you get a lot of kind of the real economy demand from Asia, where you get those miners and some of those corporates that are investing a lot of dollars and, getting paid in cryptocurrencies, are looking for, more sophisticated or better risk management solutions.
Since obviously you're targeting that professional, that institutional audience, this is the topic that has come up a lot on this show. I'm very curious to get your thoughts as well. There's been a kind of a bit of a back and forth on the level of institutional interest on crypto. A year and change ago, in the hot, heavy days of late 2017, early 2018, everyone and their mother was trying to get into crypto. There was talk about every big bank launching desks and funds and things like that. We've seen conflicting data about whether that's waxed or waned now over the course of the big sell-off of 2018. We've seen obviously a resurgence in crypto levels over the last month or so. We'll get into that in a little bit in the Bitcoin breakdown. But I'm curious, from your perspective, you're launching a new business that's aimed squarely at the institutional crypto derivatives audience. So clearly you think there's something there. What is your perspective on the institutional level of interest in crypto derivatives right now? And what impact has the last, the prolonged sell-off of 2018, has that mitigated it somewhat? Is it unchanged? What are you seeing out there when you're talking to the institutions?
Yeah, so I think the space, the cryptocurrency space, is actually smaller than people perceive it. So we are early, and I would agree that there are not that many crypto institutions or that many crypto corporates, but it's true that in what we are doing, there is like an implicit bet on the fact that this cryptocurrency ecosystem will grow. Where I'm very confident is that I don't think, a BlackRock is going to invest in Stellar anytime soon. And I never believed it. I think those guys are looking at this technology and cryptocurrencies as some sort of a sandbox for later on, probably look at, huge tokenizations of all the traditional assets. And they want to be ready for this, but I don't think they want to invest heavily or do allocations in Bitcoin Cash or Stellar or another cryptocurrency. But I think there is already a demand, which is at the level of, the size of this crypto market. So, there's been this very interesting Bitwise report that's kind of saying that, physical Bitcoin trading is around $300 million a day. I think it's around 270 they were mentioning. We are tracking very closely the futures market, the perpetual swaps, and I think at the moment it's trading around $1 to $2 billion a day. And you see the options market, which is trading $5 to $10 million a day. So we don't think that kind of, makes sense. We think, it should be more closer to the kind of same order of magnitude. And we think the demand that time will not come from retail. A lot of the volumes in the perpetual swap market is coming from retail, but when it comes to options, it's more going to be from some of those funds that are looking to play some events, that are looking to do call overwriting or stock replacement or coin replacement in that case. And we think there is demand here. We have we've been in touch with probably what I call institution is basically any business that's going to have exposure, crypto institution that's going to have exposure to cryptocurrencies through the dealing of their business. So, and there are some of them out there. There are not 20,000 of them, but there are maybe 50 to 100 companies like that. And those guys optically would benefit from a call overwriting program or for the funds, maybe stock replacement or for a miner being able to trade risk reversal, and you have to make the sell for them and pitch really that they would really benefit from those products and yeah, the start is not going to be a $10 billion business because the size of this market, when you strip all the kind of wash trading and all those fake volumes, is still relatively small. But I think this is why you want to be early, because you can grow as the ecosystem grows, and then it can get larger.
You mentioned that very interesting Bitwise report on the impact of the futures volume. I think that's fascinating. I want to get into that. So I think let's do that. Let's keep on rolling right on into the Bitcoin breakdown.
It's time to explore the latest trading activity, trends, and developments across the world's leading crypto market. It's time for the Bitcoin Breakdown.
All right, everybody, welcome to the Bitcoin Breakdown segment, the portion of the show where we break down what's been trading since the last time we all gathered here together about a week ago here on the show. And we've been talking for a while now, better part of the last month, about this prolonged upswing, this bullish move we've seen in Bitcoin and a lot of the other cryptos out there, as we're seeing, rally from the low 3,000 levels around the 3,200, 3,300, all the way up to a little bit north of 4,000 recently. Coming off that a little bit, excuse me, this week. Bitcoin down about roughly 40, 45 or so handles from last show. Last show, we were trading right around 39.90 or so level, and we're trading about, it's like coming into showtime here, it was at about 39.45 or so off about 0.5% today, and off roughly 45 to 50 or so handles from this time last week. Of course, it's had this interesting range of late, right around 39.20 or so seems to be the lower bound, and about 40.55 or so on the upside, and it's kind of been in that range for a little while. It's also worth noting we're seeing Bitcoin hit its pretty much its fifth consecutive winning week here now. Of course, if this trend continues, that may change, but for the last 5 weeks, it has been moving to the upside. That's the longest upside streak we've seen in nearly a year. So that's a good turn. April of last year is pretty much the last time we saw 5 consecutive weeks of upward swings out there in Bitcoin. Not something you usually see when you're in a protracted bear market. So perhaps that means for all the Bitcoin bulls, and you know who you are, and you write into us all the time, maybe there is some ammunition for you guys out there. We're seeing different people debating where are the new technical levels to keep an eye on. That 39.20 seems like a strong level people are looking at to the downside if it can maintain that or if it'll bounce through that. And 40.5 is where it was on the upside. Some people are saying if it can threaten beyond that, maybe to 4,200, that's a good sign that we're seeing a lot of potential for more upside room to run. So this is an interesting time out here, particularly in Bitcoin, where we're seeing a lot of diversity of opinion, which makes it fun and interesting to watch as a marketplace. Emmanuel, you guys are talking about your analytics, and I was checking it out before the show. You guys do have some great analytics, so if you want to maybe, while you're waiting for them to ramp up and get their products listed, if you want to check out SK3W, that's SKU with a 3, putting it the elite way, .co. They'll have a lot of great analytics you guys can check out without even being a member of the exchange, including looking at the realized and implied volatility out there in Bitcoin and ETH and some other products out there right now. 30-day realized, at least according to you guys, Emmanuel. I'll quote some of your stats, about 41 and a quarter or so. That's off the recent lows we saw of about a month and change ago, right around mid-February, right around Valentine's Day is when we saw that bottom out. So the realized vol around 30, around that level, up to a little bit north of 40 right now over there. So interesting stuff out there, a little bit of a rebound from a vol perspective out there in Bitcoin. And since we're just talking about the futures, we're seeing the futures over there on CME right now off about 35 to 40 handles, right around 39.45 or so on somewhat light volume, not a huge volume day today, a little bit shy of about 1,000 contracts in that front month March future, and the rest doing a few hundred, just like about shy of 1,500 contracts total on the day out there. But the reason I wanted to get to that, Emmanuel, is because you kind of mentioned that Bitwise report, and that's making a lot of the headlines, particularly in the crypto derivative space right now. Bitwise, of course, filing for a new a new ETF with the SEC here in the U.S. And as part of that, they claim they analyze the entire spot Bitcoin market to see how much volume is out there. And what they claim is that the Bitcoin futures volume, a lot more meaningful, a lot more significant, has a lot more impact than a lot of people initially claimed. They looked at the total overall numbers that are quoted by a lot of venues, and they see that the futures represent a small fraction of that, so they claim it's effectively de minimis. But again, according to the Bitwise guys, the Bitcoin futures market is far larger relative to the spot market than previously thought. In their report, they claim, this is interesting, 95% of all reported Bitcoin trading volume is fake, is nonsense. And they say when you knock off that 95%, when you look at just the 5% that is legitimate volume in their eyes, that makes the futures market a lot more material than it was. And they provided all this information to the SEC. Now, you look at some sites out there like the CoinMarketCap, a popular place a lot of people like to go to for this type of data. They say the ADV is roughly $6 billion, but the Bitwise guys, using some of their own analysis, their own methodology, they claim the ADV is actually about $273 million. So when you look at it from that perspective, the stuff on the CME, less so SIBO because they're kind of getting out of the game. They're looking at roughly, they total somewhere in the order of about 85 million. So that's not too far away from what we're seeing on Binance, which is the spot leader right now with about 110 million, again, according to this account. Well, how they analyzed this, they said they looked at the spot market and they said they really narrowed it down to about 10 different exchanges that they consider to really be credible, have legitimate volume. Those guys conduct roughly 300 million a day in daily trading volume. Some of those they include are Coinbase, Gemini, Binance. So yeah, they have the full list of what these ones are here. They say they chose those because they tend to move more in lockstep. There's an R between them, so the price differential between them is usually less than 1%. So that's why they term a lot of that to be more significant, more meaningful volume. When you get some of the other exchanges, they get out, I think they analyzed over 80 exchanges total for this report. They say you start getting beyond that top 10, you start seeing the spread getting far wider, far less relevant to where the actual Bitcoin is trading, and a lot more opportunity for manipulation therein. So kind of interesting stuff. Obviously, the Bitwise guys have an axe to grind. They have a dog in this fight because they want to list an ETF, and so they need to show that the market is resistant to manipulation and has decent size in the futures, and that's kind of what they're trying to show. So they have an agenda with this data, but still very fascinating stuff. Obviously, this got to hit home for you guys, Emmanuel. What are your thoughts on this data? And maybe in general, what we're seeing in the listed Bitcoin future space right now. Obviously, a lot of headlines, SIBO getting out of that business that you guys are looking to get into. A lot of topsy-turvy stuff going on in the listed futures market right now. What are your thoughts on this report and some of the other developments we've seen out there of late?
Yeah, I think I wasn't surprised by, I've been looking at cryptos for 2 years, and I wasn't, which is not such a long time, but I'm looking, very frequently now. And I was not too surprised around the numbers. I had in my mind BTC USD, trading probably around $300 to $500 a day. So the 270 figure is not too surprising, and the volumes they are the exchange they are mentioning makes sense to me as well, and those guys, are doing everything in their power to have I would say a clean marketplace. I think what's interesting is there is I think a tab in one of the slides where all of the exchange have taken a lot of steps to kind of act under some sort of regulatory framework and with some regulatory oversight, to the exception of Binance, which is an interesting one, because Binance I think is has got a good reputation, and they have been very transparent, and every time there is an issue, they are trying to act very quickly and in a transparent way to address it. But they kind of have this approach where they self-regulate themselves. So they are saying that will please trust us, that we'll do everything right, and the customer will be are safe on our platform, which is probably true. But I thought it was an interesting approach, given that this exchange is the most dynamic one out there, with new features being rolled out very, very often. The second point where I was surprised is that there is no mention at all of BitMEX. And BitMEX is trading. Last year, it was trading probably around $4 billion a day. And now I think this year has been, more quiet. So it's trading, between $500 million and $1 billion a day, the perpetual swap. And actually they have the Ether perpetual swap now that's kind of trading quite a bit as well. So I'm wondering why they didn't mention this exchange, which is making 4 times the volume of the 10 other exchanges. So, and which is kind of the epicenter of crypto liquidity, as they've got like the most depth to the order book, and we monitor this on our website, on our liquidity page, where you can see that to trade $10 million of BitMEX futures at market is gonna cost you probably, as of now, it's gonna cost you roughly 20 bips. And to do this on Coinbase, is gonna, if you trade at market, it's gonna cost you 5%. So they have a very, very deep order book, which makes them a very central piece of the crypto ecosystem, because a lot of liquidity providers and market makers will rely on BitMEX for showing and providing liquidity, and they will run the basis subsequently. So this is something where I'm just wondering why the omission in a very, very deep report otherwise. But otherwise, I felt the work was extremely good quality and, very helpful.
That probably gets back to that axe to grind that they have. There's the old saying, lies, damn lies, and statistics, right? So sometimes when you have an agenda, it's convenient to leave out individual data points that maybe don't conform to that. I'm not saying they did that here. I need to. It's 200 some odd pages. I need to go through the whole thing to say for certain. I've only had a chance to give it a cursory skim prior to showtime. But you're right. It is interesting, some of the omissions that they had. But the data overall is very, very interesting, and certainly shines a new light on that crypto futures segment. Really quickly, keeping on the crypto futures for a second, Emmanuel, we've seen a lot of hand wringing certainly on the institutional side of crypto lately. Like, oh, Cboe's getting out of the business. Clearly, there's no demand for listed crypto derivatives. What are your thoughts on that? On them kind of abandoning that market, and what do you think that means for the future of that space? Is that just a blip? They had a bad product, a bad ecosystem, or is that maybe is that a larger bell tolling for the crypto derivative space overall?
No, I think I'm not worried. I think the crypto space overall, it's a nascent space, and it experienced a period of, let's call it craziness in 2017, and in hindsight, it didn't do that much good, and it kind of rebased expectations of people very high. But I think the volumes and everything that I'm seeing for Bitcoin is quite healthy. Now, for the CBOE, it's interesting. I think, it's pretty clear that, CME has got the S&P futures, and people are very used to trade futures and in commodities and equity markets on CME. So the Bitcoin future, they kind of won that one. And is that a big surprise? Probably not. Where I would be interested is really to understand what they plan to do with the Van Eck ETF, because if they kind of withdraw that as well, that would mean a complete turnaround. But so far, I think, I don't even think CBOE is out of cryptos. I just think, they think, okay, this product, maybe it's not too much of our bread and butter, or we think there is another opportunity. We just have to rethink. But I think that's kind of the approach. Like, everyone has seen that you have to take a little bit of the long game here, and those things are here to stay, and they are very disruptive, and people want to be involved. So I don't think they are backing out completely.
Interesting stuff. We have to keep on rolling. I know all of you out there, not all of you trade Bitcoin, you like to trade other tokens and coins and products as well. So let's get into that with a little bit of the old altcoin universe.
It's time to move beyond Bitcoin and find out what's moving the rest of the crypto marketplace. It's time to boldly venture into the altcoin universe.
All right, welcome to the altcoin universe, the segment where we explore the rest of the crypto space. I know some people get angry when you apply crypto to all these products. I know they're not all technically in the crypto space. It's just, from a terminology perspective, a lot easier. There's many of them to lump together. But let's get into it really quickly. Let's look at the market cap for this week. And again, maybe take some of these numbers with a grain of salt, given what we saw with the data out of Bitwise, but still interesting stuff coming out of the coin market cap folks. The number one, still clearly Bitcoin, with about little north of 70, close to 71 billion in the market cap. By the way, that market cap is kind of an interesting number. We didn't get a chance to chat about it on the show last week, but we're seeing Bitcoin hovering right very close to breaking through that total 50% level for total market cap. Again, you're talking about a 70.7 billion for Bitcoin, whereas the total market share out right there right now, a little bit shy of 140 billion, about 139 billion. So, we're seeing Bitcoin right around 50, nearly 51%, but that's the lowest it's been in a while. It's been hovering around that 50% level for a little bit now, and it hasn't. That's an interesting, another indicator a lot of people like to watch in terms of the health of the crypto space, maybe a bullish and or bearish sign for Bitcoin, depending on how you look to it. Obviously, we talked to some of our recent guests. There's been a little bit of a drop-off in the ICO space of late, so that's kind of helped that a little bit. But in general, it hasn't. We haven't seen it drop below 50% in terms of total market cap. It looks like, I think it was since early August 11th of last year. So it's been a while that Bitcoin has been on top, north of the 50% level. Starting to threaten that. That's the level a lot of people are watching, so pay attention to that. Number two, ETH, distant number two with about 14 billion out there. Number three, good old XRP with a little bit shy of 13 billion. Number four, Litecoin, about 3.6 billion. Round out the top five, we got EOS with about 3.3 billion out there. Then obviously it falls off quite a bit. We got number 10 is Cardano with about $1.5 billion. So a distant number 10 compared to the top 5 over there. And in terms of the week, like I mentioned, we saw Bitcoin coming off this week a little bit. We're seeing that mostly across the board for most of the top market cap products out there. XRP has been flirting with like 31, a little bit north of that. It's back to about threatening the 30-cent level again. So it's kind of been locked in this range for the better part of the last month or so. Not a lot going on out there. ETH, we talked about a long, protracted rally we've seen going on out there. This past week, giving some of that back off, roughly 4 handles since the last show, and roughly about 2% today. Litecoin kind of unched. It's actually a rare week that Litecoin isn't in the upside. It's been moving aggressively to the upside, probably the most aggressive percentage-wise of a lot of the major crypto products out there. This week, kind of unched, so not quite selling off, but not exactly rallying either, kind of just maybe taking a little bit of a break out there. I know, Emmanuel, you guys obviously focus on Bitcoin, but you also are promising or looking to have ETH products there as well. Is that the predominant altcoin market you guys pay attention to, or are there others that are on your radar right now?
Yeah, so we look at cryptos from the kind of options angle, and we feel Bitcoin is definitely ready for an options market now, and there is good liquidity on the future side, which means that it's easy to short, and that makes it easy to kind of make markets. And this is something that wasn't there until last year, and back in 2017 it was really hard to short Bitcoin, which is one of the reasons where you had the price, I think, going that crazy. I think Ether is getting there. I think on the kind of liquidity side, on the Ether futures, is not that great yet, but I think it will get there. So we feel there is a lot of potential on building Bitcoin and Ether options market. For the rest of the coins, I would say for now it's too early, as you need to build the liquidity on the underlying.
There you go, from the crypto derivatives exchange mouth. As we keep on rolling, and almost time to wrap up the show, but I know you guys have a lot of great questions. Let's get to a few of those right now in our crypto questions segment.
You've got questions about crypto. Who doesn't? It's time to find out the answers to your crypto questions.
All right, everybody, welcome to the crypto questions segment, the portion of the show where, surprise, we answer some of your questions. A lot of you guys are still on the crypto options front, so let's get to a few of those. Liam's plural, perhaps, or perhaps just Liam S. Either way, wants to know, what are some good sources of crypto options news? Well, you're listening to one, so you wrote into the right place. I think in terms of specific to crypto options, there's not a lot out there. There's kind of us, and then there's a bunch else. Obviously, you can go to some of the broad crypto news sources that are very good, places like CoinDesk, but they're kind of all of the above. They don't really offer a lot of specific, on the derivatives front, particularly not in the options. I mean, you can kind of drill down on their site a little bit, look at some of the markets, and maybe, do a search. You could find some of it, but you got to really do a little bit of digging. They're more on the broad crypto kind of trading and valuation levels and some of the company news that is going on out there. But still a great outlet if you want to kind of just get caught up on all the latest developments across the board. Some of the venues that trade more of them, you mentioned BitMEX and others, they don't really offer a ton in way of, there's a blog there I suppose you could read, but not a lot in terms of great news coming out of those platforms either. So yeah, that's one of the reasons, quite frankly, Liam S., that we created this program. There isn't a lot of news out there, particularly on the derivatives front. It's really kind of feast. It's mostly famine. There's not a lot of feast going on yet. Hopefully that'll maybe change. We see some more products. Maybe venues here like SKU start lighting it up a little bit. Maybe that will change. But for the time being, not a lot out there. I don't know, Emmanuel, when you're out there doing your daily scouring of the latest in crypto derivatives news and analysis, are there particular outlets or places you like to go? Anything you can recommend here for our listener?
Yeah, so on the data side, we've built the Bloomberg Launchpad in a way that we wanted to see that we are used to in traditional finance to kind of monitor markets from a derivatives perspective, and that we couldn't find anywhere in crypto. So, on our site, you can find a lot of data around, vol levels and realize and open interest and block monitor and, spreads levels. There are many things. So on the data side, we have a good platform. On the news side, I think Twitter is really good. You just have to kind of see around a little bit, and some of the guys have very good content. And for the main news, I would say CoinDesk and the blog are usually quite reactive. So that's kind of enough. And then you have a crypto section on Bloomberg, which is quite good. So I think it's like with anything else. There is today. Maybe too much information available on any topic, so you have to kind of dig a little bit into the details. But there are already some good venues to get the info.
Actually, Emmanuel, you're not exactly lying. I'm looking at your offerings right now, and I'm not just saying this because you're on the show, but on the data side, you guys actually do have some interesting stuff here. I'm looking at it right now. You have your implied versus realized. You talked about some of the realized vol data you guys offer earlier. People are always asking us about the skew. You guys have it right here. I'm looking at the June 2019 skew curve right now, and it looks like it's predominantly bid down there to the put side. So go figure, given what we've seen of late out here. So a lot of the questions you guys have, certainly on the data side, you might be able to find. And I don't see. Are there any plans to charge for this data in the near future? Because right now you're offering it pretty much for free, Emmanuel. Because this is certainly on the data side. This is some pretty interesting stuff. Deribit, Bitcoin options volume. You can get it all in one place. Is that maybe the goal as well, to kind of be a one-stop, at least data information shop for crypto derivatives?
I think indirectly owning a data platform is very powerful because it puts your name in front of people naturally, and monetizing directly data, it's not in our plans. We are very happy to have this platform out there for any people. I think it's very useful for people that are already quite sophisticated and understand all of these curves, and they are live and they are ticking live, so you get all this data ready to trade, I would say, and it's also very useful for people that are less familiar with derivatives market and that can learn around some of those concepts, and it will, I think, give them some better insight around crypto markets in general. I think the crypto derivatives market in general are also interesting for investors that are not trading derivatives, as they can have like a pretty big impact sometimes, and it's interesting to understand those dynamics. But this is really something where we are very happy to have this for the community and people. We are very happy to have the feedbacks and offer that to the community.
Well, I'm glad we had you on the show today, because at the very least, it's opened up my eyes to a new information source. I think it's not a stretch to say I'll be quoting some of your information on future shows there, Emmanuel. So there you go. Well done.
Point.
You've earned a place here on future shows, if for the data, if for not else. Let's wrap it up with one more question here. We got this question from 170 L. So I guess maybe they weigh 170 pounds. I don't know. 170 LB writing in saying, how far out are crypto options listed? Great question. Obviously, you can look at it a bunch of different ways. If our friends at Acuna were on here right now on their OTC desk, you can call them up and pretty much they'll quote you however far out you want to go. That's kind of the nature of the bespoke OTC business. But I have a feeling you mean more. You mentioned listed on the more, shall we say, retail friendly venues. Obviously, you're the keeper of the data, Emmanuel, so maybe I'll let you answer this one. In the major venues, the Deribits, the BitMEXs, how far out are you seeing, obviously they'll probably go out a while, but how far out are you seeing decent activity? Is it pretty much 1 year? Or do they go pretty far beyond that?
Yeah, so on the option side, it's you get options on Deribit up to September for Bitcoin and June for Ether, which got listed last week. What we noticed is usually a lot of the trading activity is focused on the front month, so the kind of gamma heavy side of the curve. For instance, you've got the quarterlies, of course, and so this week you have the quarterly expiry for March, which is gonna cancel half the total open interest. So you have like nearly 40,000 Bitcoin options expiring on Friday. On the future side, BitMEX is the most liquid by far, with Bitflyer actually, which has got another perpetual swap instrument. And you can trade up to September as well, the curve, where you can kind of, trade the funding by trading the future versus the perpetual swap.
Excuse me. Oh, there we go. All right, that's better. All right, everybody. That music, unfortunately, means we've come to the end of another very fun journey through the world of all things crypto. Emmanuel, so congratulations. You survived the hot seat for a full hour. Well done. I know it's not the most comfortable of seats. It's called the hot seat for a reason, but you fared fairly well. And now, as your reward, sir, our listeners, I know we kind of mentioned the URL already, but if you want to leave our audience with a little bit of a hint, a little bit of a tease of what's coming down the pike from you and your team at SKU, as well as maybe where they should go if they want to learn more about your various offerings. Now is the time, sir. The floor is yours.
Yeah, no, I think, we would, for sure welcome more people to follow us on Twitter and our handle at SKU Markets and on the website. And I think people will, stay tuned and will definitely update, our following base that we are kind of building here.
Looks like right at the end there, we got, he looks like he ran out of bandwidth right there at the end, listeners. But of course, you can check it out for yourself. It's SKU.co. That's SK3W .co to learn more for yourselves over there. Some fascinating stuff. Again, we're anticipating, hopefully, all things go well on the regulatory front. Something coming down the pike from them on the product front towards the end of the year, Q3, Q4. In the meantime, though, it's definitely worth checking out as a great free source for a lot of great data. I'm looking here at implieds versus realized SKUs, all sorts of fun stuff here. If you want data, they've got it for you on the crypto derivatives front, at least for now. There's no sort of paywall there. So if you're looking at these markets, maybe you're thinking about dipping your toes in these waters, maybe you just want to know what's going on from a vol and from a trading perspective, SK3W.co is the place to go. And on behalf of Emmanuel and indeed myself, I want to thank all of you out there for downloading, streaming, subscribing, for listening live, for sending in questions, all the fun stuff that you do. Keep it coming. And we'll see you back here next week for more of the Crypto Rundown.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.